please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Yesterday, back home on the Lal Street, it was a weak session. In fact, the Midcap index was the one which outperformed the fifth straight day of losses for the frontline indices. The Nifty as well as the Sensex slipped about 0.75%. Though the Nifty managed to keep its head above the 10,500 mark, we'll keep an eye out on how it plays out today. The PSU banks, they were the outperformers with the index rallying almost 3%, led by State Bank of India. We have the big results today. Let's see which way that index moves to. Anisha Jain now joins in to give us all the market cues we need to watch out for today. Morning, Anisha.
Good morning, Manglam. Well, yes, as you mentioned, it was the fifth straight session yesterday with the Indian markets ended in the red, with the Nifty and Sensex losing around 0.7% in trade. As you mentioned, the mid-caps were languishing in trade, with a lot of large caps as well as mid-cap stocks like ACC, Ambuja, Danipa hitting fresh 52-week lows. Now, the PSU banks, as you mentioned, saw a late last hour rally led by SBI, which comes out with numbers today. So that will be an important piece to watch out for. Even if you look at fund flows pictures, the trend of FI selling is intact, because the FII sold around 500 crores in cash market yesterday, while the DIIs, they bought close to 1,200 crores in the cash market. Now, if you're talking about cues for today, the HDFC Nifty for starters suggests start around at 10,520 level, but it will be important to see how the second half of trade really pans out, whether the trend of sell on rally continues or not. Now, experts say that for the Nifty, the immediate support level will come at around 10,500, followed by 10,400, and if we see a bounce back, 10,600 and 10,666 is the level to watch out for. Talking about some more global cues, then the US markets ended well in the green, with the Dow gaining close to 300 points in trade, the S&P as well as Nasdaq up around 0.7–0.5% in trade. Now, the positive sentiment there was driven by easing tensions when it comes to the US-China trade wars. The US Treasury Secretary Stephen Mnuchin told CNBC yesterday that US has made very meaningful progress with China as far as trade matters are concerned. Even President Donald Trump tweeted that the additional farm produce would be taken up by China, and that's the reason we saw that up move as far as US market is concerned. If you talk about the Asian markets right now, well, Hang Seng and Kospi are shut today for Buddha's birthday, but other than that, if you look at Nikkei, Straits, as well as the Taiwanese index, they were all trading in the green. Nikkei and Straits were trading flat, so not major gains seen there. And HDFC Nifty for starters was suggesting the start at around 10,520 mark. The other key important factors that we need to watch out and trade today is rupee, because remember, it ended yesterday at 68.12, the lowest level that we have seen in the last 2.5 years. Fuel is another important bit to watch out for, because we have seen price rise hitting yet again the screens today. Other than that, the government officials said to CNBC TV18 yesterday that they may look at a comprehensive plan on oil prices, and some price absorption might be needed by OMCs to manage the fuel prices. But the most important cues for the Indian markets right now is the earnings. So let's see how that pans out.
Okay, and Anisha, what are the stocks?
Well, taking in from where I left it, so earnings remains the most important cue for the markets. We have a lot of earnings lined up for trade today. We have SBI that comes out with numbers, IOCL, HPCL, Cipla, Dr. Reddy, Symphony, etc. are some names to mention and watch out for. A lot of earnings traction is also what we will watch out for. First up on DLF, it was a weak set with the revenue down 40%. Other than that, JSPL also came out with a weak set, with the margin declining to 82.5% versus an expectation of around 86.4%. So margin miss coming in there. MGL also reported a weak quarter, because it was a bit of weak quarter when it comes to the operational front as well as volume growth. The margin there came in at 30% versus an expectation of 35.5%. So that was a bit of miss. Future Retail also reported a bit of weak set, because the growth in EBITDA came in at around 11.6% versus a Morgan Stanley estimate of a growth of around 23%. Now, talking about some good results, Global Spirits came out with good results. The revenue was up around 10%, margins up around 7.7% versus 4.3% reported earlier. As I was talking about earlier, OMCs will be in focus, because CNBC TV18 exclusive suggests that there might be some price absorption that the OMCs will have to take in. Let's see how they react to that. Fortis will be in focus yet again, because they have a EGM scheduled for today. Colgate, the management commentary on the call was not very enthusiastic. They said that the mid-term toothpaste volume growth will be around that 6% mark. The competition intensity remains high, and they have seen an increase in the competitive intensity intensity in the quarter gone by. Aurobindo Pharma, they've got a US FDA approval for one of their drugs. Other than that, a bit of subdued news coming in from the banking space, wherein the finance ministry officials suggest that there is no plan to ease the PCA guidelines for banks. Let's see if they react to that at all or not. We'll watch out for stocks like Praj as well, because there are some exclusive sources telling us that Petroleum Ministry is looking for reduction in GST rates, and similar is the case for airlines stock as well, because we understand that the ministry is looking to get the ATF into the GST regime. So let's see how all of this pans out.
All right, Anisha, thanks a lot for that. We will take it straight to earnings. Then on the other side of this break, SBI, Dr. Reddy's as well as Cipla report their numbers today. We'll get you the key expectations on the other side. Welcome back. This is Power Breakfast on CNBC TV18. The big earnings today from the pharmaceutical space. We have Dr. Reddy's. It will report its fourth quarter numbers today. Pricing pressure in the US and continuing regulatory issues will weigh in on the pharma major. Ekta, what are you expecting there?
Well, for Dr. Reddy's, I'm not expecting much. We're probably expecting this more of what we've seen in the previous quarters to continue into this quarter as well. So, for example, the revenue is expected to grow around 2.5%. Margins should probably be maintained between 17 to 18%. And the profit is likely to rise around or be flat on a year-on-year basis. Now, remember that the range is quite wide when it comes to Dr. Reddy's, because there is always the case of maybe some one-offs which they probably report. But nonetheless, overall, the same theme should continue for Dr. Reddy's, where the US business is likely to be pressured simply because of the kind of pricing pressure that we've seen. We've seen most of the companies talk about continued pricing pressure, such as the likes of Lupin, also the likes of Strides, as well as even something like a Taro. So that is expected to reflect on their US numbers. India should probably see a bounce back, probably see some amount of stability. And again, the commentary with regards to the regulatory issues that they have on two of their plants, Srikakulam API facility, will be top of mind in terms of what the company has to say on that, considering that we still haven't heard from the US FDA after they received only around 2 to 3 observations, and it's expected to probably see a re-inspection by the regulators.
All right, so we'll keep an eye out on what Dr. Reddy's does. Cipla, Ekta, what are you expecting there?
Well, for Cipla, we are expecting a bounce back on a year-on-year basis. That's simply because same time last quarter was quite a dismal quarter for Cipla. Their margins had fallen to 14%. They had recorded a loss same time last year. So there is expected to be a bounce back to with margins at around 19%. Now, if they don't deliver on margins, that will be a big disappointment, because the margins have been fluctuating quite a bit for Cipla. Separately, the India business is likely to do well. Again, the US business is not that much in terms of a component as its peers. So the street will be watching out for what the approval timeline looks like, also what the kind of approval timeline is, as well as what kind of growth we can see in FY19, because it is expected to be better off as compared to its peers. So more of the same for Cipla. Margins will be top of mind.
All right, more of the same for both Dr. Reddy's as well as Cipla. But moving from the medicines to the hospitals, Fortis EGM today, Ekta, what is there to be expected there?
Yes, so just to give you a background, and we mentioned this yesterday as well, the EGM is going to take place today in Delhi, and this was called for removing 4 of the independent directors on Fortis. Now, 3 of those independent directors have already resigned yesterday. That is Harpal Singh, Tejendra Singh, as well as Sabina Vaisoha. So there's only one person out of these 4 who were asked to be removed by Eastbridge and Jupiter, who is left on the board. That's Brian Tempest. So that is likely to take place today. But otherwise, the commentary with regards to what happens in the EGM, what kind of shareholder grievances there are, that will be important to watch out for. Separately, the reports have indicated that the Ministry of Corporate Affairs is now looking into Fortis and looking into allegations of mismanagement, considering the kind of complaints they've seen come through on Fortis. So that will be something to watch as well.
All right, Ekta, thanks a lot for that. We'll keep an eye out on all the developments in Fortis. Watch out for results of Dr. Reddy's and Cipla. But the petrol and diesel prices, both of them are at an all-time high. What are the options before the government to deal with this surge? Is the excise duty cut, or is an excise duty cut the only answer? Well, sources tell us that the government may look at a comprehensive plan to actually ease fuel prices. In fact, the thinking within the government is believed to be that duties cannot be cut in isolation. Sapna Das, who's been tracking all the developments there, is with us with all the exclusive details. Sapna?
Well, we have clearly been given to understand that this could be a comprehensive plan that may be in the works as far as arresting the oil price impact is concerned. First, of course, watching the rupee and trying to maintain that at a reasonable level by encouraging RBI interventions. The worry here is that even if the government goes ahead and tries to hold prices of petrol and diesel or reduces the excise duty, the problem is that the moment the rupee depreciates, that impact may get nullified. So that's one key concern, possibly more RBI interventions to keep the rupee at a reasonable level, number one. Number two, of course, in terms of what happens to the, the daily price revisions of OMCs, is there any mechanism, is there any way to try and keep that in a more staggered manner? Well, that is something that the government is concerned about, and there could be something further on that front as well. So that could be the second area. The third, of course, the key question in terms of lowering the excise duty itself. Now, this also will have to be probably accompanied by commensurate lowering of duties by states in terms of the VAT. Now, there are 20 states where the BJP is in power, so there could be some hope on that front. But, the states will have to be sensitized on this front. How much they cooperate is still a bit of a question mark. Of course, and the excise duty cut itself, now we do know the fiscal implications. A 1 rupee cut in the excise on petrol and diesel will set the exchequer back by 30,000 crores for the entire fiscal year, double the quantum of the cut, and you have a hit of around 26,000 crores. Now, is the government ready to take, stomach this kind of a revenue loss right in the beginning of the financial year? That's a key question. But looking at the, the market situation as of now, probably they may not have too much left. So basically, all the levers will have to move in tandem. RBI controlling the rupee, states looking at their VAT rates, center looking at its excise duty, and of course the OMCs looking at the retail price.
Okay. All right, Sapna. Thanks very much.